lots of money being made, lots of situations being created that can enhance your wealth. And one thing that we talked about the other day in class, I need a pen. Hold on, guys. Give me a second. You know, you just feel weird and almost naked when you don't have an ink pen. Like you just, so I need a pen. I have to have a pen. Like LL used to say, I can't live without my radio. I can't live without my ink pen. All right. So anyway, the market's been just super strong, and this has been just an amazing time to be an investor, and I hope that you're consistently investing. If you haven't gotten started and you're not sure what to do, you can log in at theblackstockmarketprogram.com, and there is so much there in terms of beginner stuff. You have access to something that is called the Dr. Boyce Method, where I actually break down an 11-step process of how you can go about picking stocks for your portfolio, 11 questions you can ask yourself. And if you want to even also just see it, and you don't have access to it, you can go to the drboycemethod.com, but you should have access to this as a member of the Black Stock Market Program. So I hope that you guys will take advantage of that and use your membership. Now, those of you that are in the Prime program, where we generate income from selling stock options, I want to let you guys know that this conversation, Stock Market Tuesdays, is more for equities, and it's more. We're not as advanced as options just yet. So if you have any stock options questions, you can save that for our Prime class meeting, which is going to happen. I believe there's one tomorrow. I think I got to double check that. But you'll get a notification if you haven't gotten one yet. Is it Thursday? Okay, yeah. So there's a Prime meeting on Thursday, and it's actually going to be something where we're going to do some Prime 101 stuff. We're going to start from the beginning in terms of going through that process of buying the stock, selling the options, protecting your position, evaluating your position, and generating your income. And that's just a refresher for those of you that still that would like to walk through that process with me. But also, if you log into drboyceprime.com, there's already material there that you can use if you're a beginner. And then if you want to ask more advanced questions, of course, you can do that. There's a link where you can ask questions inside the login. Now, okay, sorry, oof, so much talking. Okay, so if you want to know one thing I invested in this week, now again, this is not investing advice. This is just me in terms of what I did. I wanted to get in on this whole electric flying cars thing, and there's this company called Joby Aviation, Joby, that I invested in. I bought some shares in Joby, this morning, but it's not as if the stock is unanimously loved by all the analysts. I want to be clear about that. It's not like they're all saying, "Oh my God, this stock is the next big thing." It's more like I kind of believe at some point these flying cars are gonna matter. That they're gonna be out there, right? We're gonna eventually get these things they've been promising us for 10,000 years. And Joby is getting some significant investments. I think Toyota just put $500 million into their company, which I think is a good sign of confidence. And also, I think they got some money from somebody else. So anyway, they're big. They're trying to start this whole air taxi ecosystem, which I cannot wait for them to finish it because I hate driving all the way to O'Hare Airport, which is 45 minutes from my house. I want to just hop in an air taxi and be there in like 20 minutes. Anyway, Joby, Joby is one of the stocks I did buy today. There are other companies that are trying to be players in this space. Some others are Archer Aviation, ACHR, not investment advice. So these are companies. Lilium, Lilm. They have a jet that can take off and land vertically. And actually, good old Boeing and Airbus are actually trying to get in on this space. Boeing is just they're just a crap company right now. They're just looking like a complete hot ghetto mess. Because they lost because basically their culture went bad. They're just the way they make the planes. They used to focus on making the best airplane possible. And then what happened was they got acquired by someone that basically wasn't thinking about making quality planes anymore. They were just thinking about trying to make a big profit. And now, as a result, their stock used to be $404.91 5 years ago in 2019. Now it's down to $154.76. They're in the middle of multiple investigations. They also have a big strike that's happening right now, which could cripple them as well as a company. The thing about Boeing that's really fascinating is that they are considered to be too big to fail. They're considered to be a company that's just, you know, the U.S. government is going to just stick by them forever. Maybe they're run by the Illuminati or something. I have no idea. But they, those people, those secret people that they don't tell you about who are more powerful than the president, or as Eisenhower talked about, the military industrial complex, right? Maybe they're just not going to let this company fail. So I don't think this is a company that'll go bankrupt. But I think the 154 price point, actually, I wouldn't be mad at you if you bought Boeing at 154, because the theory that leads me to say that maybe that's not a terrible investment is because I'm looking at this company and thinking, how much worse are y'all going to let it get? Like how much worse can it get? How much more are you going to allow this company to keep putting out shoddy airplanes, without somebody stepping in and giving them better management? I think they're even screwing up things in space. I don't know if you guys know this, but they gave SpaceX and Boeing a certain amount of money. They gave Boeing this much money, SpaceX that much money. SpaceX has done 8 or 9 rocket launches in that time since what they gave them the money, like 2012 or something. And Boeing has done like 0 or something, or like it's just been terrible. And their astronauts are now stranded in space because Boeing can't go get them. They tried to go get them, but of course, in the Boeing tradition, they created a very faulty product that led to them not being able to bring them home. So Elon Musk, right? Elon Musk, his company is going to go get these astronauts and bring them home, which is just a big black eye for Boeing, a black eye for NASA. And so Elon, this crazy Republican, is like his companies are doing these amazing things, which is fascinating. But anyway, with that said, though, I wouldn't necessarily think Boeing would be just such a terrible investment if you believe that they can turn things around, because this is a company that has just so much value and so much of a history and just so much of a tradition. Now, one thing I wanted to address really quickly is how many of you, give me a yes in the chat if you've been following this stuff with these storms down in Florida. Have you seen these storms that are happening? They are this I'm gonna just say this. It's a little political, but if you're a person who ever questioned global warming and the effects of it, I don't know if you have much of a case anymore. I kind of think you might want to like take some notes, because now you're starting to get these disasters that are just insane. I think that they call it. Can anybody give me the word for it? They have hurricanes, but then there's something like worse than a hurricane, like a hypercane or something. Is that what they call it? A hypercane? Somebody, I was actually playing Call of Duty with my buddy. I have a bunch of other 50 highly immature 50-year-old guys I play Call of Duty with. Sometimes I play on YouTube and we talk about financial stuff and just talk like a bunch of black men. You should come hang out with us one day. It's really fun. And anyway, he said, "Hey Doc, have you heard of a hyper?" I think it was hyper. I could have swore he said hypercane. And and I said, "I've never heard of that." And he said it's like a category 6 or something. They said this is like beyond, like, I think the hurricane scale goes up to 5. Now they, I guess, have to change the scales because this thing is so bad. And this is part of a trend. Who says that they're living it? Someone says they're living it right now. Well, my heart goes out to you, and I hope that I don't. But I hope I don't talk about it in a way that belittles what you're dealing with. So please, if it sounds that way, just chalk it up to my stupidity. I am not trying to do that at all. So anyway, there are massive, massive economic implications of this. This is affecting so many people in terms of their ability to even buy houses in certain regions. There are insurance companies that have no interest in even going into certain places. There are insurance companies that literally are now saying, if you live in this state or this area or that area, we will not cover you at all. Right. So it's not even to the point where, risk is kind of a funny thing. Typically, you can pay someone to take your risk. That's what you're doing when you buy a put option. When you buy a put option, you're paying someone else to take the risk that your stock is going to go down. Right. So there are some situations, though, that are so risky that no one will take the risk, no matter how much you pay them. And insurance companies are starting to get to that point. So here are some of the effects of what's been happening with these worsening hurricanes. Number one, insurance premiums are rising like crazy. Insurers are raising premiums to cover potential payouts In Florida, homeowners insurance premiums, pay attention, have increased by 42% from 2021. The national average increase is 9%. So if you live in Florida, your homeowners insurance premiums have gone up by 42% since 2021. That's insane. In a lot of hurricane prone areas like Louisiana, premiums have doubled or tripled. So this plays a part if you are thinking about investing in real estate in those regions. You really want to go and research what's happening with homeowners insurance. Don't just assume it's going to be there and something that you can easily pay for and it'll be a tiny little line item in your investment deal. And in fact, actually, if you look at some of the reasons why my wife and I are happy to own stock and sell the options as opposed to buying property and renting it out, that's a factor. I don't know if I would want to be a real estate investor in a region where homeowners insurance premiums have gone up 42% in the last 3 years, because that's going to really affect your cash flow, affect your bottom line. All right. Next, what else? Reduction in available coverage. Many insurers are pulling out of hurricane prone markets altogether because of the risk. For instance, companies like Allstate and State Farm have significantly reduced new policy offerings in states like Florida and Louisiana due to the financial risk of hurricane damage. In Florida, over 400,000 policies were dropped by private insurers in 2022, leaving homeowners with fewer options. So they remember the insurance company could just say, "Look, we out. We don't want anything to do with you anymore. Good luck. Have a nice life." So that's another issue. Increased claims and payouts. Between 2017 and 2021, the insurance industry saw $90 billion in insured losses from hurricanes, marking a significant uptick in the cost of hurricane damage. Hurricanes like Irma, Harvey, and Maria in 2017 alone cost $93 billion in insurance claims. So they are paying big time. State-sponsored insurers are under pressure. As private insurers retreat, state-backed insurers are becoming the last resort for homeowners. Florida Citizens Property Insurance Corporation, for instance, has seen a sharp increase in policies, growing by 50% in 2022. The rising reliance on state-sponsored insurers puts these entities under significant financial pressure and raises concerns about their ability to cover large-scale disasters. Reinsurance costs are rising. In case you don't know, insurance companies need insurance companies. Did y'all know that? How many of y'all, give me a yes if you knew that about reinsurance, that even insurance companies need insurance companies. Sometimes insurance companies don't want all the risk that they've taken on, so they pass the risk on to someone else. Did anybody know that? It's almost like with my wife, she's a therapist. And I told my wife one day, I said, I think that you therapists need to learn something. I said, I think therapists need a therapist, because you don't think I'm your therapist because therapists don't think they need a therapist, but you need a therapist because you spend the whole day taking in all these problems. You're hearing all this negative stuff from people, and I'm your husband, so I got to deal with that later on. So I had to learn how to be a therapist, because even therapists need therapists. And what makes it hard to be a therapist is that most therapists think they don't need a therapist. They think because they have to be the one who has it all together. But I'm like, no, you got a therapist, babe, but I'm gonna let you think that you don't have one. But I learned all the little techniques. So the same way a therapist needs a therapist, insurance companies need insurance companies. Yeah, because everybody has scenarios where they got to pass something off to someone else. So basically, reinsurance companies, which are the insurance companies for insurance companies, they are, let's see, it says here, they have also become more expensive. According to industry experts, the cost of reinsurance in hurricane-prone regions has increased by as much as 30 to 50%. The increasing intensity of hurricanes caused by climate change is expected to worsen this trend. The National Oceanic and Atmospheric Administration, NOAA, reported that hurricanes are becoming more intense and causing more rainfall, and the frequency of Category 4 and 5 hurricanes has doubled since the 1970s. So what does this mean for homeowners if you're looking to buy a home? The cost of insurance and the difficulty of obtaining coverage in high-risk areas are impacting home ownership. Many homeowners are being priced out. Mortgage companies often require comprehensive coverage, limiting the ability to buy or maintain homes in hurricane-prone areas. So ultimately, what's happening here is that the investor landscape is being dramatically impacted by the cost of insurance, because basically real estate is in jeopardy in areas that are prone to be hit by these hurricanes. I do believe it's going to continue to get worse. I don't know of any reasonable plan that they have in place to really fix this or to address the climate change issues. So I think this will be a significant long-term trend going forward. And I would encourage you, if you are a real estate investor, to keep this in mind and make sure that you do your homework before you go buy a property. Don't go buy something in a region just because it's cheap. Make sure you understand every single expense that's going to come along with that. And also, in fact, when you own a home, there's also all these other expenses related to just the maintenance of the home. That for some reason that's gone up too. That literally just the cost of owning a home has gone up since the start of the pandemic. So people think, okay, if I buy a house and I'm making all this money on the capital gains on the house, then I'm doing good, which is true to some extent, right? Owning a home is better than nothing. Owning a home is better than nothing, right? But the thing about it is that when you own a home, what happens is that you can, for example, I had a neighbor that came by my parents' house when I was at home in Kentucky, and she told me about a house that was in the neighborhood, and she said, "I bought this house for $250,000." And I said, "Yeah, I know that house because I thought about buying that house because I wanted to live next to my mama, but my wife told me I can't do that." And so she told me. Then she really wanted to make me jealous. I became a real hater when she told me that house that she bought for $250,000 is now appraised for 550,000. So I'm just looking at her like just mad, looking at her like Snoop Dogg when he looked out the window in the movie Baby Boy. Like I'm gonna fight you, lady. I'm playing. I was really happy for her. But here's the thing though. In the midst of that though, even though the value of the home goes up, and that's the big bottom line number we look at, the reality is that every year it costs tens of thousands of dollars to just to own that house, right? So as you're sort of evaluating how real estate fits into your life, and I think real estate should fit. I am a real estate owner. I want to make that clear. I've explained how I like selling stock options more than real estate, but that's more of a personal preference because I don't like being a landlord. I don't like all the bureaucracy and paperwork. That's not fun for me. I like stock options because I can just buy me 1,000 shares of Microsoft, sell the options, make $9,000 or $10,000 a month, and be done with it. Right, that's it. But at the same time, though, I think real estate is a solid investment in one particular sense. Real estate tends to go up in value, period. As we were talking about when we were doing our financial consciousness training the other day, I was showing you homes 100 years ago that they had these crazy prices. There were houses that were like $2,000 or $3,000, $4,000 for a gigantic mansion, stuff like that. So real estate tends to go up in value because it's a scarce resource, and you have this sort of a growing number of buyers. You have inflation in terms of the value of the dollar does drop every year a little bit. That's why you want to invest, and so real estate long term is a solid place to park money, but you have to really understand it may not be the most efficient way to sort of grow revenue and income. Yesterday, I ran into this comedian that I hadn't seen for 5 or 6 years. I stopped to get a burrito or something at a Taco Bell. Don't tell my wife because she tells me I can't eat there. Her my fast food is always the devil. But when I leave town, I don't cheat on my wife with women. I cheat on my wife with like I'll go to Chick-fil-A or something, but and I won't tell her. And anyway, so I stopped there to get this burrito because I ain't gonna let no lady tell me what I can eat. And so I go in and I'm getting my burrito and I see this comedian that I hadn't seen for years. He's like, "Hey, Dr. Boyce." I said, "Hey, who are you?" And he's like, "Oh, I'm Barry Brewer." And Barry Brewer is apparently Barry Brewer is a big deal. I didn't know he was a big deal, but I was like, wow, you're a big deal. He has all hundreds of thousands of followers on Instagram, and he's now in like he showed me he's in this Tyler Perry show called Bruh. I don't know if anybody's watched it. It's called Bruh. Anyway, so I'm talking to Barry. I'm like, man, good to see you again. How you been? Look at you, man. This is amazing, right? So we're just talking, and he basically says, "Hey, if I have some money and I want to park or I want to invest my money, what should I do?" So the first thing I said to him is what I've said to you all before, which is mutual funds. I think mutual funds are a great place to start. If you go to blackwealthmasterplan.com, that will get you started. It doesn't take a year to learn how to invest. It doesn't take a month. It doesn't take a week. It takes like 5 minutes. So just get started with mutual funds. That's the first thing I told him. But then I also got pulled out my phone and I showed him, I said, well, if you have like say $100,000 and you want to go buy some stock, let's pick Meta. Let's say you buy 500 shares of Meta stock or something. And I showed him just like we do with the options. And I said, yeah, it will cost you about a quarter million. Robinhood will loan you half the money, and then you can sell these 500 options and for this price, and this is how much money you'd have. And it was like 12,000 something dollars per month. And his eyes got really big, like holy crap. And so what really is interesting to me about this conversation with Barry that I want to impress upon you is that it really does benefit you and behoove you to really expose yourself to all the different ways of making money. The same way if you're picking an outfit, you want to sort of look at all the the different types of outfits that you can wear, and then find the one that really works for you. Because what will eventually happen, what should happen when you're becoming an investor is you should be exposed to a lot of different ways of investing. Like, oh, I can make money here, I can make money here, I can make money here, I can make money here. And so your decision to participate in an investment should not come down to whether or not it's a moneymaker. I want you to understand investing well enough where you literally are sitting here saying, yeah, I've got 20 different ways to make money. I had to pick the one that works for me. Right. Like if I say, if someone tries to get you to wear a certain outfit and you say, well, good, I'm glad I can wear this outfit because without this outfit, I would be completely naked. I would have no clothes. So whatever you give me, I'm going to put it on. That's kind of how we approach our economics. Do you get what I'm saying? Like we approach our economics where we assume we're going to have nothing and we're struggling and we're broke. And then somebody says, hey, here's a job, shoveling cow shit, and it's going to pay you $40 an hour. And we're like, ooh, I want that job. Well, why do you want the job? Because you clearly don't want to shovel cow crap. I'm not gonna say shit. You don't want to shovel cow crap, but you're doing it. Why? Why? Well, because it's paying you money and it's better than the alternative. And part of the reason that it's the best alternative is because there aren't that many alternatives. It's almost like growing up in a small town where you date somebody because they're the only other black kid in your school, right? That's not a fun way to pick a spouse, right? You don't want to pick your wife just because you're the one black guy in the third grade and she's the one black girl in the third grade. Or 12th grade. You shouldn't be getting married in the third grade, but you get the point. You should have selections. You should have options, right? You should go to the black school where you got all different kinds of men or women that you can choose from, and then you just pick the right one. Unless you're like Kamala, who went to Howard, and then for some reason she marries Dougie. There's a lot of good black guys. Why are you marrying Dougie? Anyway, I'm being silly. So anyway, my point is to say that when it comes to investing, you want to be able to understand the terrain well enough to know all the different options. And one of the biggest mistakes I see people make is they do things just for the money. Right? They'll start a certain business just for the money, and I don't think that that's the best approach. I think that the best approach is to say, yeah, I can make money in 8 different ways, but I'm going to make the money in a way that really, really fits my preferences, my lifestyle, how much risk I want to take, things like that. So a good way to get started might be if you go to blackwealthmasterplan.com. There's like a free sort of beginners, like the $5 a day plan. It's totally free. It'll get you started in 5 minutes. Also, you can log in if you like stock options and what I was talking to Barry about. You can go to drboyceprime.com, Prime. There are people in the chat that are Prime members, I'm sure, and they can tell you what their experience has been like. And then also we actually have a real estate program in the Black Business School. That's drboycerealestate.com. So that's where I work and collaborate with real estate experts to expose you to all the different ways to make money in real estate. Like Daniel Jennings, who just came in and shows how he built an amazing business creating these tiny homes in Mississippi that he ships all around the world. And so he's really, really good. So feel free to take a look at some of that. And the other thing about money that's interesting too, just as a sort of a quick thought is one thing that I was talking to a young guy about the other day was he was asking, he said something like, if you know finance, why aren't you rich? And I said, what makes you think I'm not rich? And he said, well, because, if you're rich, you would be dressed a certain way, or you'd be driving a certain type of car, you'd be living in a certain type of house. And I said, really? Is that what you think? Like, you think that being rich means you have to show everyone that you have money? And he said, yeah. And I said, well, I'm not going to tell you if I'm rich or not, because that's not important. Um, I said, but if you ever really become rich, the dumbest thing you could ever do is to be flashy with your wealth, right? The silliest thing you can do is to tell everybody how much money you have, how much money you make. I had one conversation with Tyler Perry on the phone, and I remember the one time I talked to him, he was on the cover of a magazine because he surprised everybody because he made $100 million that year. Nobody knew that he made that much money. All the white people were like, "Holy crap! How did this Negro that we never heard of make more money than us? He's black. He can't make more money than white people." And I said, "How does that feel to have everybody?" How does that feel to be on the cover of this magazine where people are talking about how much money you made? He said, I hate it. He said, it's terrible. I don't want nobody wants their income to be broadcast like that. He also said that people don't understand that when you make that much money in a business, that you have far more expenses than regular people have. See, when people see 100 million, they're thinking, oh, you got a paycheck for 100 million. Like somebody came up and wrote you a check and said, here's $100 million. Now you can go to the club. It's not like that. When you're a business owner, you have massive expenses. He says, people don't know I just paid Alan Payne $2.5 million. People don't know that I had to pay such and such for the studio. People don't know how many thousands of dollars a day it costs to run all this, right? And I got that. I completely got that. And so one of the things I would say to you is that if you get to the point where you make taxes right there, that's a big, your biggest business partner will always be the IRS, just so you know. When you die, especially if you don't have a plan in place, the biggest beneficiary of your inheritance is going to be the federal government. They're going to be at your funeral in the front row, crying next to your mama, waiting to get a check from the lawyer after they bury you. Right? That's what the IRS does. So ultimately, I would say to you that when you get money, part of protecting the wealth is protecting the wealth, meaning that when you have wealth, you will have a target on your back. When you have wealth, you will have people that want a piece of what you have. When you have wealth, you will have people that are going to come and try to, you know, offer you bad business deals, steal from you, scam you, whatever. And so the best way to protect the wealth is to not let everyone know that the wealth even exists, because people aren't going to hunt for treasure unless they know that there is treasure to hunt for. If you know what I'm saying, do you get what I'm saying? Like, people won't try to pursue something that they doesn't know exists. So really it should be a compliment to you. If you're wealthy, some of y'all are wealthy, some of y'all are doing really well. I think it's a compliment to you when you're doing well and people think that you're not doing well. That means that you are doing a very good job of sending a signal that says, look, ain't no money over here. Don't ain't nothing to look for over here. I think that's really important. A lot of people don't think about that. And this is why rappers lose so much of their money, because rappers are the first ones, not all of them. I'm talking about the corporate rappers, the ones who, rap all the toxic stuff. They love to show you how much money they have. And then next thing you know, you hear about a rapper being killed for money. You hear about a rapper being being drugged and robbed by some prostitute. Maybe some of these record labels. You never know. I think the record labels, it's not a coincidence that a lot of rappers end up dead, and the insurance policies are owned by their record labels. I think that there might be something to that, and that's just a very bad way to go about protecting wealth. Even the rapper Little Baby was on the Breakfast Club, and he said I used to fight everybody who talked crazy to me. I used to show it just to show everybody I'm not a punk. I would pull it out and be ready to fight you. He said, but then it cost me $4 million. And he said now I don't fight anybody. Now I'm the biggest punk. He used a different term, BAN. If you know slang, you might know what that means. BAN, right? I'm not gonna say it. But he said I'm the biggest BAN out here, because I'm not gonna lose all my wealth because I decided to fight somebody. So a lot of wealth building and wealth protection is about being strategic. And strategy really means not just overcoming tough situations, but real strategy is when you know how to avoid situations. The best way to solve a problem is to never have the problem in the first place. You understand? That's the best way. The best way to solve a problem is to never create it. So if the one guy is over here trying to figure out how to deal with his crazy baby mama without her taking all his money, I'm kind of the guy that says, why don't we just never ever have a crazy baby mama in the first place? Why don't we try to think carefully about where crazy baby mamas come from? You got to go to the root of the problem. And I think that that's important. So anyway, let me circle back and let's talk more about the stock market now and stuff like that. And by the way, if you have questions, put your question in the Q&A section and I will answer. BTS nickel. Yeah, there we go. BTS nickel there. I like that. That's funny. Yeah, so put your question in the Q&A section. And also, we're going to do Prime class on Thursday for those that are interested. So you can go to drboyceprime.com to log in and take a look at what we're doing with stock options. And then on top of that, the All Black National Convention is October 25th. So that's about 2 weeks away, a little bit more than 2 weeks away. So we're going to be in Lombard, Illinois, right outside Chicago. And so you can go to allblacknationalconvention.com. And I'm going to gather all of our students from Prime together so we can talk. And then also those of you that are in the mastermind, we're going to have a special gathering in my suite, actually. And we're just going to kind of talk about stuff. And you can tell me about your business ideas and what you're trying to do. I want to support you. Okay. So anyway, let's see here. I wanted to discuss how much margin to keep in my portfolio. With margin, my whole portfolio got sold to the margin call. I had money in my reserves, but wasn't aware until it had dropped below my limit. It had dropped below my limit. Yeah. Okay. All right. So here is a rule of thumb. If you are selling call options, for example, you really want, in my opinion, my rule would be Whatever your total amount of money that you have in your account, I think 15% of that number should be what you have in investable money at a given time. When they have buying power in your Robinhood app and they show you how much stock you're able to buy, I think that number should be 15% of your total investable cash. So what does that mean? That means that if I've got 10,000 as my investable money, then I would have about 1,500 in buying power at all times and keep that number above that, because if the stock prices drop and if you're using margin, you're going to get closer to that border where there's a margin call. Margin calls are the danger zone to some extent when it comes to stock market investing, because that means you got to call the fire department. I call it the fire department because that's when you need liquidity. Money, cash is called liquidity. So you need liquidity, water to put out the fire. And if you don't have any water, if you're in the desert and the water supply is gone and there's a fire, then that fire is going to burn down the whole building. Meaning that what's going to happen is that if you can't come up with the cash to meet that margin call, they're going to require you to sell your stock. And selling your stock in a down market is about the worst feeling that you could ever have. You will feel like you went to 1,000 Diddy parties without the baby oil. That's how bad it feels to sell your stock in a down market. It is painful. It sucks, because what you really want to do is you're trying to hold out until the market recovers, until the sun comes out, right? But when the market goes down, I think of that in my mind because I'm a visual person. I visualize it like a rainstorm. Okay. Like, so when the market goes south, and it's like if somebody tells me it's raining outside, I'm not going outside. I'm eventually I will. I know it's not going to rain forever, right? That's the weird thing about stock market investing is people think that when the market goes down, that it's crashed and it's the end of the world. Oh my God. I'm like, dude, there's tomorrow. Like, stop that. There's tomorrow. Like, why are you acting like today is all that there is? Yeah, you need to come to financial consciousness class, because consciousness means you can see that the sun will come out tomorrow. Like, you can look a week down the road. That's what consciousness is. It's elevating and looking down the road and saying, oh, okay, well, this is going to get better. This too shall pass. But some people don't do that. When in the middle of a panic where you're very emotional, you feel like it's the end of the world, and so you start panicking and you start overreacting and blah blah blah, and then you make a bad problem worse. So what I do when the market goes south is it's like I'm sitting in my basement and somebody says it's raining outside, and I look outside and I say, "Wow, that okay. I guess I won't go outside right now." Meaning, and going outside means I'm not going to sell anything. I'm not selling nothing in a down market unless I have to. That is equivalent to walking outside in the rain. So what happens when you have a margin call is is basically it's raining outside and they tell you, okay, you need more cash. If you want to buy, you want more time, you got to buy it, right? You buy it by putting up more capital, right? So if you can't buy that time, then they basically make you sell your stock in a down market, which means you're now going to get wet because now you got to walk outside in the rain when really waiting another day would have made everything better, right? So keep that cash to the side to solve problems, and then once you solve the problem, you can take advantage of opportunities. A lot of people forget how much money gets made during a down market. Down markets are a blessing. Down markets, market crashes are the biggest freaking blessing that you can ever imagine. Do you understand what the research says about purchasing stock during down markets? Do you know how many millions of billions, trillions of dollars has been made by people buying tons of stock when the market is down? This is a fact. When they look at the data and they say, well, what if this person only buys during the down markets? What if they only buy when the market goes down? They'll say, oh, well, their return on investment is massive. They made an insane amount of money, right? So when there's blood in the streets, that's when you want to be a buyer. It's not precise. It's not easy. It does take financial consciousness. I use that term a lot. I've never seen it in a textbook, but it's an appropriate term because consciousness, all that means is it's like a type of awareness. It means sort of seeing that today isn't all that there is. It's the ability, for example, in the year 2024 to be able to see the year 2035. Can you see the year 2035? Because 2035 is to 2024 what 2024 was to 2013. So if you could go back in time, if you were a lot of y'all, all of y'all were here in 2013. I doubt that there's anybody here younger than 11 years old. Maybe there is. If so, congratulations, you're going to be a millionaire because you got smart parents that are bringing you to class. Um, but in 2013, if you were the person who could see 2024 and planned for life in 2024, like literally made investments in 2013 to get ready for 2024, you would be a multimillionaire. You know why? Because you would have been out and said, okay, let me go buy a 500 Bitcoin because they're only like $2 a piece. So let me take $1,000 and buy me some Bitcoin. So now just those 500 Bitcoin alone are worth millions of dollars. But then you might say, let me go buy some of this Apple stock. Apple stock is costs $20, $30 a share. Let me buy some of that. Let me go buy some of this. Let me go put some money into the S&P 500, right? And you would be very wealthy because of that, right? So ultimately, if you can see the future, then you will become a great investor. But if all you see is now, or if all you see is what most people do is I believe their brains are restricted to the present and they're always stuck on the past. They're looking at what happened before, and maybe because they're still damaged from that, and then they see what's happening now, they can't really see what could be happening in the future. And this is why consciousness is so important. If you become a conscious thinker, that makes you a more strategic thinker, and that also gives you more options and more freedom because you're not constrained by what's in front of you. You're seeing all the possibilities of what could be in front of you if you pivot and if you make strategic moves. Okay. All right. So let's see. What do you think about Robinhood stock lending? Is it worth it? Natasha's asking that. Natasha, I think it's okay. It's a good way to make a an interest rate that's probably equivalent to what you might make in a high yield savings account or something like that. If you have no use for the asset, then why not? I don't do it, but I don't see anything wrong with it. King May, can you explain where does buying power come from when you have not loaded any money? How is this calculated? Buying power comes down, King, to the amount of margin that you've told the app that you want, right? So you tell Robinhood, I want as much margin as you can give me. And what they'll do is they'll give you the buying power number, which basically says this is how much stock you can buy, assuming you're buying safe stocks. Now, if you're buying risky stocks, then the amount of buying power drops. But if you're buying like Apple and Microsoft and all that, that buying power number, it might be double the amount of money you actually have in the account. That's because Robinhood's basically saying, look, we'll back you, we'll loan you some money to help you buy more stock if that's something that you want to do. Aisha, just be careful with debt though. Remember, margin is debt, and debt is a critical part of the economy. Debt makes a lot of people a lot of money, but debt is not something that is to be played with. Debt is very powerful. Debt can get you into a lot of trouble. So keep that in mind. Aisha, I did I did a put on NKTX $5 strike. Okay, well, you know what, Aisha? Let's save the options questions for our Prime meeting. We're gonna do that on Thursday. I'm gonna text that out to you guys if you haven't gotten it yet. If you want to be notified when we meet for stock options training, just text the word options to the number 87948. Text options to 87948, and I'll send you a notification. Now, for those of you that got here a little bit late, I mentioned to you earlier that the stock that can you put it in the chat? I don't have the ticker symbol. The eVTOL company. Oh, shoot, what was it? Kobe? What? Ah. Put the ticker symbol in there, the stock that I mentioned. Joby. That's right, not Kobe. It's Joby. Yeah, Joby was the stock that I just bought. Again, not investing advice. And most analysts like the company, but I actually bought the stock because I want to be invested in the this whole flying taxi space. I just kind of think this is the future. And Archer, ACHR, is another company that's in that industry. I haven't researched that one. Joby, I looked into a little bit more. Archer, no. But Boeing's actually getting in there too. And we talked about Boeing as well. All right, so let's see here. Andrea says, do you have to be enrolled in Prime to attend the meeting Thursday? It's a meeting for the Prime students. So if you go to drboyceprime.com, Andrea, that's where you can sign up. So feel free to go to drboyceprime.com and you can take a look. And Amani's in the chat and she can help you find everything that you're looking for. So let me see what else is happening right now in markets. For those of you that are also in Prime, what Dr. Boyce is buying, I'm updating that today. So I'll have 5 more stocks in there that you guys can feel free to take a look at whenever you like. So just feel free to log in. Okay, so a few other big headlines that are happening right now based on CNBC, and I'll see if anything kind of jumps out at me. Investors slam the brakes on the hottest trade going on in the market. That's interesting. I did see something where there's an analyst who feels like a stock like NVIDIA is not the best investment because he believes NVIDIA isn't going to keep growing for the rest of the year. And their argument is probably similar to what my argument would be, is that a lot of the tech stocks are seen as being overvalued. I know that they're the most popular, they're the ones that are being talked about the most, But I think that's a big danger. Whenever a stock gets discussed that much and it gets that much attention, it's also at risk of being overvalued. So Citi is expecting Nvidia's margins to bottom out early next year as its Blackwell platform will take time to fully ramp up. Analyst Atif Malik maintained his buy rating on the artificial intelligence darling. He also kept his $150 price target, which suggests shares can jump 17% this year. So he is saying Nvidia is a stock that you could buy even today and be expected to make money from. So let me take that back. He's not saying don't buy it. But it looks like he's putting the brakes on some of his expectations. He says, while we are bullish on another strong 40% year-over-year cloud data center CapEx growth next year, we expect the stock to likely remain range-bound through CES January before Blackwell-driven year-over-year sales and gross margin inflections in April. Okay, so fundamentally, I'll just read the rest and I'll explain what it looks like he's saying here. Fundamentally, we believe AI adoption remains in the third to fourth innings as enterprise AI demand takes off next with AI agents. Okay. So he's saying that he's bullish, right? That right there is 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 pretty much the first thing to understand. What he's basically saying is that he believes Nvidia is a worthy investment. Also, when he says that AI adoption's in the third to fourth inning, he's comparing it to a baseball game which has 9 innings. So they're basically saying that we're only less than about halfway through the game, not even halfway, a third to a half of the way through the game, and that there's a lot of the game left to be played. He also is saying that once Blackwell, their new chip, kind of gets out there, that should expand their profit margins, which could lead to more growth in the stock. I think that the simple approach, in my opinion, is to say that at least with Citibank, this particular analyst is saying he believes Nvidia is a buy. The only limitation I would put on this, though, is that Nvidia is a buy, but I think that there are other stocks out there that are better buys. Like if you log in and you go under what Dr. Boyce is buying, you'll find some Frontier investments, some Frontier markets that are out there. Frontier is different from emerging markets. These are little countries that like Vietnam and stuff like that that really haven't done that well because there are market frictions, market issues that keep the wealth from being extracted. And over time, as these issues kind of disappear, you're going to see some massive growth there. Also, small cap stocks are seen right now as something that could be a massive catalyst in the future. The tech stocks are kind of seen as sort of these balloons with these massive expectations leading to these very high valuations, such that if somebody pops the balloon, these stocks could collapse on you. So don't get over connected to the AI and technology hype. I think you should be invested in it. Like AIQ. AIQ is a really good AI ETF that I've owned for a while, and it's made a lot of money this year. A lot of you already own it. I plan to hold it for several years because I believe AI is going to be massive. I know Microsoft is about to purchase. They're purchasing. They want to buy 3 Mile Island basically and get that whole nuclear reactor restarted so they can have enough power for their AI data processing center. So they're kind of revving up for this massive revolution with AI. AI is going to be everywhere, right? So you really want to make sure you're on top of that. What else? So that's it. That's it for Nvidia. Let me actually move on. I was going to say something else, but let me stop talking. All right. So another thing is Ray Dalio says investing in China is tricky as Beijing becomes less favorable toward capitalism. Yeah, this is something I've always believed. So billionaire Ray Dalio thinks that he's a smart guy. He thinks it's tricky to invest in China right now as Beijing may be seeking to structurally move the country away from capitalism. The founder of Bridgewater Associates, one of the world's largest hedge funds, said investors should take a nuanced and cautious approach to investing in the developing region as it undergoes a regime shift. Quote, there's something big going on that they had a debt crisis and they also had a capitalism crisis. Are they favorable to capitalism as we knew it before? I do not believe they are in the same way. I agree with Dalio 100%. China has had a big problem with the debt load taken on by some of their massive real estate companies. I mean, the amounts that they bought were just, I mean, just mind-boggling. And now they literally have, I think, something like I could have sworn that they said they had like a couple 100 million houses that are completely empty. that nobody's living in. It was some ridiculously large number. It was crazy. And so basically what he's arguing, it seems, is that people are starting to question the government's commitment to capitalism. China is technically a communist country, and when I taught my finance class in China, the students were all members of the Communist Party. And one of the students explained it to me. He said, "We all joined the Communist Party because that's how you get ahead in politics and in life. That's how you get the good jobs and all that." So he's like, "We don't really care that much about it. We just do what we're told, and that's the way you get, good opportunities." And so what he's saying is that this country that is an economic powerhouse, that's a military powerhouse, that's just got so many people there, could be in for a regime shift. And if you look at the history of China, you'll know that even though China has a lot of potential and it's just grown by leaps and bounds, they have a history of some degree of instability, right? So if there is sort of this massive shift in terms of what people want, you can see China literally fall off the map in terms of being a place that's even investable at all. But people invest there because the market is so big and there's opportunities there. But I'm really careful. I do have some investments in China. I think I still have some shares in Alibaba and stuff like that. But I told you all the Tekadu story, which was really financially traumatic. It's not fun to lose $100,000 at one time. That just ain't fun. Like I said, I'd rather be stuck at a Diddy party. All right. So anyway, I need to stop making Diddy party jokes. Anyway, shout out to that. That's going to be interesting because there's a lot of financial lessons around Diddy, and we've already talked about that. I'm not going to go into it, but really, I think I'm beginning to think that I think that there's like some mafia stuff kind of in the background there. Did anybody look up Diddy's father? Did you know that Diddy's dad was connected with Frank Lucas from American Gangster, and his daddy got killed because of some type of business deal gone bad? So Diddy, I wouldn't be surprised if he grew up in like kind of a mafia mob connected sort of space. And someone Kevin said, "Are you sure about that preference?" That's really true. You're right. Now that I really think about it, maybe I'd rather lose the money than be stuck in a Diddy party because that would just be bad. But yeah, I think his dad was a gangster or something, and he got killed like in some mafia type stuff. And so it made me wonder, did he grow up in that culture? Is that how he got connected to the heads of these record labels? Because a lot of these record labels are funded by mafia drug money, right? So that kind of when I learned about that, that kind of helped put together the puzzle pieces as to why this guy suddenly had all this influence and power and everything else. And it's crazy how the black community ends up being such a pawn in this bigger game, right? Like we're just sitting here and everybody just loves the music and we all love Biggie and hip hop and all that. But when the further down the rabbit hole you go, the more you'll see these sort of really insidious organizations sort of controlling the black community and profiting from the black community in a really terrible way. So anyway, let me keep going here. All right. So what are your thoughts on the story that's out on Roblox? Joni, I have not seen the story on Roblox. What's going on with Roblox? Let me look it up. Let me see here. Yeah, Roblox used to be a great investment, but there's something that's been going on with Roblox. Let me look at the stock. I could have sworn I saw that that Roblox stock was not doing very well. Yeah, well, it's down by about 7% this year, which is pretty bad given that the year has been so good. The over the last year though, it's up by 31% in the last 5 years, but the last 5 years is down by 42%. This month it's dropped a little bit. So let me see what's okay. Branded pedophile hellscape. Holy crap. Oh my God. Okay. So certified lover boy, certified. All right, let's see here. All right, so billions wiped off company's value after claims that young users were exposed to grooming, porn, and violence. Woo! A massively popular online children's video game has been labeled a hellscape, or I mean, say the P word. Y'all know what the P word is. I don't even like saying that word. It's so disgusting. By a notorious U.S. investment firm. Oh, Hindenburg Research. Lord Jesus. When Hindenburg puts their sights on you, that's bad. They're like the financial version of the Grim Reaper. Because all Hindenburg research, if you don't know, does anybody know about the story about the Hindenburg? Anybody heard about the Hindenburg? The Hindenburg was like I think if I'm not mistaken, it was this big air balloon or something, but it wasn't like quite a balloon. It was this big floating thing that you could get on that for like fancy rich people. And it ended up having this horrible tragedy where right when it was about to land, all the reporters were there like filming it. You should look it up. It's crazy. And all of a sudden, like one of the helium tanks or something blows up and the whole thing just died. So a lot of people got killed from the Hindenburg. So Hindenburg is like the Titanic of air balloons. So they named their company after the Hindenburg, which tells you that a little bit about how they kind of operate. So what they'll do is they'll just find a company and they'll research the company and they'll find all the reasons that this company is a terrible company to invest in. And then what they do is they will I believe that what they're doing is they're taking these financial positions in these companies and then they issue these reports telling you how terrible the company is. So then when the report comes out, the value of the stock tends to drop and that allows them to make money from the short positions that they've already taken in these companies. So it's really kind of something that I almost wonder why it's not illegal to do this, but they make an investment and then they tell you why that company is terrible so they can then buy the stock back when it's really cheap. So they're not buying the stock, they're selling the stock. They do a short sale, put options, all that stuff, so that when the value of the company drops, they end up making a killing. So Hindenburg, but the problem is though that a lot of these reports they write have validity. That's the thing. So the owners of the company or the board of directors or the CEO, they have to go out and refute what the Hindenburg uh has written about them. And a lot of times they really can't because their research has some degree of credibility behind it. So here's what they're saying about Roblox. I did not know about this story. And yeah, this is very concerning. It says Hindenburg Research, one of Wall Street's best known short sellers, claimed that users of Roblox were openly trading child abuse images and alleged that it had found hundreds of accounts named after Jeffrey Epstein. Oh. The investment firm claimed young users were exposed to grooming, porn, and violence, and that safety was being compromised in an attempt to boost profits. It said there were no age controls on chat rooms dedicated to adult materials. Bosses had turned down opportunities to improve safety, Hindenburg alleged. Quote, we found Roblox to be an X-rated land hellscape for every time I say the P word, y'all know what the P word is. I'm not gonna say that, keep saying that word out loud because I don't even like saying it. A P word hellscape replete with users attempting to groom at our avatars, groups openly trading child P, widely accessible sex games, violent content, and extremely abusive speech, all of which is open to young children, and all of which Roblox has cut content moderation spending to appease Wall Street and boost earnings. So what they're saying is that in order to make more money, they were not protecting the kids. That is a bad, bad, bad red flag for this company. Roblox has rejected the report's claims. A spokesman said the company had a, quote, robust set of proactive and preventative safety measures designed to catch and prevent malicious or harmful activity on our platform, end quote. Shares in the company fell by more than well, it must be a British article. It says 9PC. I guess that 9%. I don't know. As trading opened in New York, wiping more than $2 billion off of the company's value. Okay. So let's see. When did this story come out? And let's see what to think about this. I'm going to give you my assessment on this. Today is, okay, October 8th. Oh, so this came out today. Okay. So let's look at the stock. This is a great opportunity for analysis. So let's take a look at Roblox stock and let's see what impact the report had on the value of the stock. All right, so here I'm gonna share my screen with you guys so you can see it. Basically, the stock went down by about 3.6%, $1.51. Now, this is significant in my opinion because the market itself went up. Most stocks went up. So on a typical day, Roblox would probably go up with the other stocks. That's what they call a systematic effect. It's like a bunch of boats that are in the ocean. If the water rises, the rising tide typically lifts all boats. So if your boat's sinking on a day where the tide is lifting the other boats, that means your boat got a big problem. Your boat got a big old hole in it, right? So that would be called what they in finance we refer to that as an idiosyncratic problem. That's a problem specific to you. It has nothing to do with the economy. So here, because of the idiosyncratic specific problem for Roblox, this stock has dropped by $1.40, 3.38%. That's pretty significant. If this were a bad day for the market, like let's say the rest of the market had also dropped, this number would probably be double. It might be 7% or 6.5 or 8% even, right? So here's my assessment on this. I believe Roblox is a company, despite the fact that they may have made an error here. I believe Roblox is a well-run company. I do believe that. I think that they're innovative. I think they're smart. I think that they're probably alarmed by this Hindenburg report. Hindenburg went in. They made their bans. They made a few million from this deal. Um, I think they're going to resolve the issue. I think that because this is so serious and people are going to be concerned, millions of people have their kids on this platform. They're going to fix this. In the words of T.I., they're going to get on this expeditiously, right? They're going to expeditiously fix this. And when they fix this, I believe that that will boost that stock price back up again. So if you want to know my assessment, and I don't know if I'll have time to even jump into this, but if I'm a person that is interested in buying Roblox stock, I would consider this company to be a buy because overall, Roblox is known for just being really creative and innovative and really being a wave of the future because they've captured the minds of so many young people and they've done such a good job in terms of executing. I don't think one report from Hindenburg Research is going to undermine, years and years of great business that they've done. So I think they're just going to fix the issue. They're going to prove that they fixed it. Hindenburg will back off. They're going to take they're going to make a couple $100 million. They're going to back off and they're going to be done. Like, in fact, I wouldn't be surprised if whatever short position Hindenburg took, that they've already started closing those short positions to prepare for the fact that Roblox is going to come back and deal with this issue. Okay, so if you want to know what I think, I'll tell you what I think, and I won't just say it. I'm going to put my money where my mouth is. I'm actually going to buy me some shares of Roblox stock right now. So I'm actually doing that right now. And I'd like to buy stock in front of you guys just to show you that it's not something that you have to overthink. It's not a big deal to just go buy a few shares. So yeah, I think I'll buy me a few shares of Roblox. Not that many. Let's see. Let me get 20 shares. So let's see, 20 shares. The stock price is $39.97. 20 shares cost me 800 bucks. So now I'm an investor in Roblox. I officially can go to my kids, go to my spouse, and say, hey, babe, when Roblox makes money, we'll make money. Right? When Roblox does well, our family will do well. And I want you to do the same thing. When you buy that stock, be proud of that. Like, be proud of the fact that you go buy shares of McDonald's. Tell your kids, like, hey, we own a piece of that. Buy shares of Apple. Hey, we own our family owns a piece of that. That's part of financial psychology, right? The first step to being wealthy is you got to start thinking wealthy. Think like an owner. Think like a titan of business. Don't think of yourself as just somebody's employee. That's nice. It's good. I honor that. You work hard. You deserve a lot of respect for that. But I think maybe you deserve more. I think your family legacy is more important than whatever company you work for, and I want you to pour into that too. All right. So let's see a couple more questions, and then we can bounce out for today. Do you have any REITs in mind to invest? Not in mind. I think that if you look at some of the real estate investment trusts that are run by companies like Vanguard, those are typically pretty good. If you look at what Dr. Boyce is buying, I think I did a whole section where I grabbed a bunch of real estate investment trusts. I think REITs are a great way to invest in real estate without actually having to go buy property. So that's my 2 cents on REITs. Yeah. So if it's associated with a great company like a Vanguard or BlackRock or something, you'll be in pretty good shape. If you go open up your app and you just type in REIT, you'll find some REITs that'll pop up. Let's see. King May, how do you feel about investing in China? Will it be possible to get money out? Are a lot of fees involved? No, actually, you can just buy shares in Chinese companies. They have ETFs and mutual funds that invest in China. So I'm not particularly I wouldn't be interested in trying to make direct investment, like going over there and buying property and stuff. You could just buy stock of companies that do business in China. So like Alibaba is one that a lot of people like. There's some others out there. I don't know if Temu is publicly traded. I think they might be. I can't remember. Does anybody know if Temu is publicly? I know they sell a bunch of cheap crap. Um, but they're a threat to Amazon because people like cheap crap. Let's see. Does Temu? Oh, PDD, PDD. Yeah, PDD is the ticker symbol for the company that owns PDD. PDD Holdings, yeah. And it's rated a strong buy. So, yeah, I mean, but just know China's very risky. And part of the reason that stock is um right the stock is priced lower than what some experts believe it should be is because there's this inherent risk of investing in China. China will pull the rug out from under your investment if the company decide or if the government decides to go in a different direction. It's not like the U.S. where companies have more power than the government. In China, that does not happen. In China, the Communist Party goes out of its way to show any billionaire, any corporation, that we have more power than you. Jack Ma, who runs Alibaba, who's kind of like the Jeff Bezos of China, he was on the run. Like he disappeared from the public eye for several months because he criticized the Chinese government. They don't play that. They don't like the US. We can do that. We can talk crazy, say whatever we want. In China, you can't do that. You'll be in jail, and they'll kidnap you, and your relatives won't see you for 6 months, and they won't even explain what happened. They'll just bring you back, and suddenly you'll be back in the public eye, apologizing for whatever it is that you did. So you don't want to mess with the Chinese government. In fact, LeBron James. This is just funny little story about China. LeBron James. I remember he was super critical. He's critical of a lot of stuff, right? And he's a smart man, right? He has opinions about things, and Black Lives Matter and stuff like that. Or I'd like this politician over that politician. But when it came to China, they asked LeBron. If you remember, China pretty much came in and just gangster slapped Hong Kong. Like came in, Hong Kong was supposed to be passed back to China from the British government after a 99-year lease. So Hong Kong had gotten used to being a democratic society and having all these freedoms like freedom of speech, stuff like that. The problem is China doesn't play that. They don't do freedom of speech and all that. So when they handed Hong Kong over to China, they had millions of people in the streets protesting, like saying, we don't want to be under Chinese control. So the Chinese government just came in and gangster slapped the whole city. They literally started locking up anybody who was a dissident, anybody who criticized China, they were gone. And so a lot of human rights uh believers, if you will, human rights activists around the world were appalled by what they were doing, right? And so they asked LeBron, they said, so what do you think about what's happening in Hong Kong? And LeBron was like, well, I don't want to get involved with that, or that's not my business. So he said something like that. And people were like, wow, you got an opinion about everything except for China. And the reason LeBron didn't have an opinion, in my opinion, was twofold. One, the NBA makes billions of dollars in China. When I taught finance in China, every single boy in my class played basketball. They were all terrible basketball players, but every single one of them played basketball. When I went into the cafeteria for lunch, Kobe Bryant in the NBA Finals was on TV. I remember that. They love basketball, and they were terrible at it. But then the second reason that LeBron did not criticize China is because LeBron knows that if he was to really push the envelope too hard, he might go over there for an exhibition game and get arrested. They might do a Brittany Griner on LeBron James just to make a point, just to make a point, right? So China's not like the United States. They don't really play those types of games. And actually, speaking of Brittany Griner, what's really funny about Brittany is, do you know? Remember when Brittany came home and they traded her for Victor Blount, who's known as the Merchant of Death, because he's like the world's most notorious arms dealer. Well, what's crazy is that he's literally now back in business. Like he's now literally back to selling weapons around the world. Like the Wall Street Journal did a whole story about it, and I said, man, ain't that something else? So now he's like free, and he's actually selling weapons. To the Houthi rebels that are backed by Iran. So all the weapons being shot back and forth between Iran and Israel that might lead to World War III, which could kill us all. That's all like he's a part of that. Like he's selling weapons to that side. He's probably selling weapons to the Israelis too. That's what they do. That's the that dark side of capitalism. They'll look for a war to start and then sell weapons to both sides and say, yeah, just keep killing each other and keep paying me and whatever. That's the sick part of it. So anyway, okay, last quick question. What do you think about LUMN? I don't have that in front of me. If you log in and leave that as one of the questions, I can look that up for you. Unfortunately, I don't have anything to really look up and do the research on the stock, but I can definitely do that for you when we meet in class again. So anyway, I've got to get out of here, guys. I hope that this conversation has benefited you. There's so much um, out here in terms of opportunity and possibility. I hope that you'll give me your commitment that you'll continue to invest consistently. That is the number one key to wealth. The stock market is the number one variable that drives wealth in this country. So I want you to be a part of that. So make absolutely sure that you're participating in that. That's going to make a bigger difference in your life than a lot of things. So I'm going to go head out of here. And just a reminder, the All Black National Convention is October 25th through the 27th. You can go to allblacknationalconvention.com, allblacknationalconvention.com. Also, if you want to join us for financial consciousness training tomorrow, just text the word morning to the number 87948. So text morning to 87948. And El Haj says, when's the next one-on-one? I don't know when that is. If you want to do a one-on-one, one-on-one, or sometimes we do what we call Dr. Boyce VIP, where we have small group sessions, like 4 or 5 people. Just email support@theblackbusinessschool.com, support@theblackbusinessschool.com, and they can help you out and help you find anything you need. And if you have any questions for us,